stock that's really caught everyone's attention the last couple of days is Birla Corp because they delivered solid numbers, EBITDA per ton coming at the highest we've seen in 18 quarters. To find out more about the way ahead, we're joined by Mr. Aditya Saraogi, the Chief Financial Officer at the company. Hi, Mr. Saraogi. Good morning and thanks a lot for joining in here on CNBC-TV18. First of all, congratulations. The last many quarters I've been saying, Mr. Saraogi, when will things improve? This time around, it's going to be more about sustaining this kind of improvement. Now, on a base of around 18.1 million tons first, tell us for FY26, what kind of volume growth can you deliver? And also weigh in on demand. Is it as strong as expected?
Thank you, Nigel, for having me on the show. In terms of volumes, in this year we expect the industry to grow between 6 to 8%, and I think we should also clock in that kind of a number, if not more. So that will translate into volume in terms of specific number. It will translate to anything between 19 to 19.5 million in the next financial year. And as regards demand, although it has come off from what we saw in March, but if you see on a year-on-year basis, definitely there's a healthy improvement.
Got it. Okay, all right. What about incentives for, I think the last year it was around 103 crores. For FY26, what kind of a number should we work with?
This year also it should be around those numbers only. Next year with the Kundanganj line 3 coming into operation full-fledgedly, it should improve definitely.
All right, so it'll be ballpark per 100 crores odd, right?
Yeah.
Okay, now you've specifically mentioned that realization improvement of around 7% on sequential basis is because you have exposure to North as well as East India. Right. What is your current sales mix? Because, your key focus used to be Central India. So break it up for us, Central, North, East, what is the current mix?
See, before I give you the mix, let me tell you, across the board, there was an improvement in the sale prices, although it was slightly more prominent in North and East. So even Central and West, we did see price improvement. So it's not that it was specific to only North and East.
Okay.
Now coming to the split broadly, we are about 50% in Central, 18-19% in North, 18-19% in East, and about 13% in West.
Got it. All right. Now tell us about realization, sir. You have given us a broad split about your sales mix. How is realizations today on a blended basis? If I compare it with Q4, is it higher?
It is at similar level on a blended basis.
Okay, what does this mean then in terms of EBITDA per ton? You have clocked more than 1,000 rupees per ton, and I have to give you credit for that. I recall when you all didn't deliver a good quarter, you said you'll end the year close to around 18 million tons, and you guided that the EBITDA per ton will improve. But I don't think anyone was factoring in this sort of a number of more than 1,000 rupees. What is the range we should work with? Volumes will be there, so you'll get operating leverage. Realizations are more or less stable. And you have input costs that will cool off with, you're changing your fuel mix and various other measures at your end. EBITDA per ton guidance, broadband?
I think, Nigel, you are bang on in terms of all the factors that you highlighted. And on top of all of this, we have got some efficiency improvement measures also, which has yielded us about 150 rupees per ton over the last couple of years. And that is continuing and that will continue to give us benefit. So definitely in terms of EBITDA per ton, the margins, we are expecting a healthy improvement over the last financial year, although we are not putting a specific number to it.
You can be in this vicinity of Q4, maybe minus 100?
No, that is not possible, Nigel, because you will appreciate Q4 is
got the incentive.
Cyclical industry. No, incentive is accrued every quarter. Although it was marginally higher at 41 crores compared to the run rate of 26 crores on a quarterly basis. So that's not a significant increase. It's more to do with the cyclical nature of the industry. Q4 is typically the best quarter of the year. So you can't just extrapolate it to the remaining part of the year.
Okay, so 850 to 900 rupees per ton is doable.
I'm sorry, I cannot give you a number.
Okay, you give me another number then for Mukutban. You're going at a run rate, Q4 at least you did close to around 750,000. For the year you did around 2.5 million tons. Now don't disappoint us on this. What was the EBITDA per ton in Mukutban, sir?
Nigel, I'll tell you, instead of giving a specific number, I'll tell you with the incentives coming in, It is, in fact, better than some of the other units that we have, IUs we have.
Okay, all right. It's a little bit better. That used to be the drag when it just got commissioned. But
Yeah,
as you're saying, it's turned around, and now, in fact, it's a booster.
yeah.
Final couple of questions before we let you go. Net debt in the books, it's come down. That was a cherry on the cake. What is the absolute net debt number we should work with? Because you have got 1,000 crores of capex on, that's will be spent this year. So what do you end this year with in terms of net debt? And the last time around, I was, quizzing you whether you have some asset monetization, some non-core assets. Any such asset will get monetized in this year, which could help you keep the debt number under check?
In terms of debt, we should probably close at a number around 3,000 crores. But in terms of debt to EBITDA, definitely we expect it to be less than 2. And that is a more relevant number insofar as Birla Corp is concerned. Because when the company is growing, you should see the debt in the context of the EBITDA that we are earning. And that is a number we track internally. In regard to the non-core assets, yeah, we do have some non-core investments which probably will be north of 600 crores. But we don't have any plans to sell them. They have been giving us good returns. So unless it is really required for business purpose, we don't intend to dispose them off as yet.
Okay, all right, Mr. Saraogi, appreciate you joining in. Congratulations on a solid quarter. You're guiding for pretty okay times going ahead as well. We look forward to chatting up with you as the year progresses.
Thank you.